Are you selling your shares, I should say?
I'm not. I'm definitely long term on this one. I probably won't be adding to my position at this
Right.
price. But no, I think that this is like a great company long term. I mean, I'd be lying if I said that like AI wasn't sort of turning into kind of like a bubble a little bit.
Right.
But bubbles could go on for way longer than anybody thinks. I mean, there's gosh, his name's going to escape me now, of course. But there's a guy who basically made himself famous by calling, and it's not Michael Burry, right? It's not the Big Short, but basically for calling, it was tech stocks, right? And so like in the early '90s, he saw that tech stocks were just like going crazy, and he was like, "Nah, man, that's a bubble. It's going to crash. I'm keeping my investors out of it," right? So like he kept his investors out of the Nasdaq companies for all of the '90s, and they avoided the dot-com collapse, right? But like if you go back to when he first made his call in the early '90s and then the lowest the market got after the dot-com collapse, his investors missed out on like 45% gains because he was 10 years early on calling the bubble. And so like he's back again being like, oh, AI is a bubble. And I'm like, sweet, we got 10 more years of gains. All right.
What's up, guys? Welcome to the Angel Research Podcast. I'm Jason, again here with Jason.
Yeah.
Only do Jasons here.
Yeah, man. It's a powerful name.
Jason Williams, welcome back. This is probably the fourth one we've done in a while.
At least.
Yeah, so I'm excited. I particularly want to talk about Nvidia.
Yeah.
Because, they
reported
crushed earnings again.
Uh-huh.
You know, it already was $1 trillion company, and now, and you were telling before we got on there, you've been in Nvidia for a while.
I have been. So this is one of my most successful investments. I never expected it to go like this, But yeah, back in like 2017, 2018, something like that, my niece's dad was telling me he worked for a defense contractor at the time that like they used Nvidia's chips, and I was like, but they only make like gaming, like graphic processing units, and he's like, dude, they're so powerful, you can run anything on those. And so I was like, oh, that's interesting. So if they're the best GPUs, then that means they're like the best at probably everything else. Let's start buying some shares. So it was probably, in like the $20 to $40 range back then. And I just sort of kept accumulating. And then it turned out they were great for mining crypto. And they went crazy with crypto. And then the crypto market crashed and Nvidia came down with it. And it got down like close to $100. And I was buying shares then too, because I thought that was, it's a great company, and I figured it was going to come back eventually. I didn't expect it to come back that fast, but like within a year, it's up 300%, I think, on this AI madness.
Yeah, the gamers were sort of, around that time were like pissed because they were trying to buy these GPUs for gaming, and all the crypto bros were snatching them up for mining. So that's interesting. I mean, what's your long-term take on that, on the Nvidia sort of thing? Is it sort of oversold here or overbought here? We're going to have a correction, or what's up? Are you selling your shares, I should say?
I'm not. I'm definitely long-term on this one. I probably won't be adding to my position at this price. But no, I think that this is like a great company long term. I mean, I'd be lying if I said that like AI wasn't sort of turning into kind of like a bubble a little bit.
Right.
But bubbles could go on for way longer than anybody thinks. I mean, there's gosh, his name's going to escape me now, of course. But there's a guy who basically made himself famous by calling, and it's not Michael Burry, right? It's not the Big Short, but basically for calling, it was tech stocks. Right. And so like in the early '90s, he saw that tech stocks were just like going crazy. And he was like, nah, man, that's a bubble. It's going to crash. I'm keeping my investors out of it. Right. So like he kept his investors out of the Nasdaq companies for all of the '90s, and they avoided the dot-com collapse. Right. But like if you go back to when he first made his call in the early '90s and then the lowest the market got after the dot-com collapse, his investors missed out on like 45% gains because he was 10 years early on calling the bubble. And so like he's back again being like, oh, AI is a bubble. And I'm like, sweet, we got 10 more years of gains. All right.
Right. It's, it's one thing to know that something is a bubble, and it's another the thing to just miss out on the gains entirely.
Yeah, exactly. Like,
So-
I know this is a bubble. Like, I know that crypto is a bubble, but, I also know that bubbles take a long time to break. And there's, famous quotes about the market remaining irrational longer than you can remain solvent.
Right.
And, we wouldn't have those quotes if these kinds of things didn't go on longer than people expect. Now, that's not to say that it's not going to burst eventually. I mean, the Fed seems to be like on a course to really try and break something. And then you've got Congress who's just spending tons of money, and they're kind of like pulling on both
Right.
ends of a rope here, and one of them's got to win eventually.
Well, I think it seems at least obvious that AI is going to be a transformative technology, and to me, it seems even more obvious than the .com at that time, because at least at this point, like Nvidia is a company that sells a product that makes money. They've been
Right.
around for a while.
Yeah.
It isn't pets.com.
Yeah, no, there's
or
no like negative
even
EPS here.
Amazon. Amazon obviously, came out of it. It was one of the few that sort of survived that .com crash. So so I'm assuming you're looking at it very similar. There's going to be winners and losers in the AI thing. Everybody's coming up. I think they said the mention of AI in earnings calls this year has gone up like 45% or something.
That's crazy. AI replaced recession, which had replaced inflation, I
Right.
think, which had replaced coronavirus.
Right. So you have to look at these, and there really is not that many pure plays, I guess, which is sort of where things are going. So what, obviously NVIDIA is an sort of AI infrastructure play, right?
Yeah,
the same
kinda
way
like pick and
you
shovel
would,
deal.
right? So the reason everybody's piling in is they're like, hey, everybody's going to go all in on AI, and what do you need to run these large language models and these big things? You need chips, you need processors, you need things specifically designed to run these things.
And NVIDIA just sort of has like a head start on,
Right.
on a lot of the other companies. So, I mean, the other companies will probably catch up. I mean, Intel is going to, put a lot of money towards developing chipsets for AI. There's one that's like Splunkworks or something, like Skunkworks. I don't know. No, Skunkworks is like where they make the
Right.
jets and stuff. But it's another like, small, I think it's like a mid-cap semiconductor company. They're relatively new to the game. They're not like a Taiwan Semiconductor. They're not an NVIDIA. And there's one of the other things, right, is NVIDIA, they design the chips. They don't actually make them. The fabrication goes on mostly at TSMC, at Taiwan Semiconductor. So that's another one that would probably, I mean, you've definitely got geopolitical risk there because that could become China Semiconductor, in the near future. Who knows? Yeah, you've got those plays, the semiconductor plays. A lot of people are going to tell you like Microsoft and Google, because Microsoft has integrated ChatGPT with Bing, its search engine, and Google or Alphabet has integrated Baird, a different generative platform, with its. Microsoft, because Microsoft has that $40 billion investment or $10 billion investment into OpenAI.
Right.
Is it 40? Was it like 10 and then 40? They have a huge investment into it. But they've been making investments into other companies too, more pure plays where, you've got companies that are working on, this one's really exciting, I think, is communicative AI. So it's like you've got this generative AI that like you can type a question in and it can type back to you, and that's
Right.
really helpful if you can read. But if you're one of the, I think it's like there's a billion people out there, almost a billion people in the world who are illiterate, like adults.
Yeah.
And we're not like talking about like little kids who haven't learned to read yet. These are adults who are illiterate. The internet is completely useless for them other than maybe like Instagram.
Yeah.
Like they can look at pictures.
No
and
wonder
they can watch
TikTok's
videos.
so
But, like,
popular.
yeah, exactly. I mean, there's a lot of people out there who can't read. And so if you could have conversational AI, like this software that can not only understand what you're saying, no matter what language you're speaking, no matter what, dialect or accent you have, it can understand a Southern accent just as well as it can understand an Australian accent.
Right.
It can understand somebody speaking English with an Indian accent, whereas, some of the bots like Siri and stuff like that, they have a little bit of trouble with accents and things. So this really like opens up the internet to all of these different people who until now really it was very, very limited for them. Now they can talk, they can do like a talk search, a voice search, and they can get all of their responses back verbally instead of having to read through the pages. Then there's another company that's working on using AI to help with augmented reality. So we've been talking about augmented reality like forever. I always go back to Back to the Future Part 2, where like the Jaws, it's like they're rerunning Jaws, and they have that like really cheesy hologram come out and like try and bite Marty McFly. He's like, ducks and hides from it. And it's like we're sort of getting to a point where it could be like that, where we've got this where we could have augmented reality, and you think about like, oh, well, we could have advertisements or stuff could pop up in your glasses and be like, hey, don't forget to pick up the eggs, you're going past the grocery store. But you've also got stuff like companies that are using AI and using GPS and sort of combining the two and making it so that you can sort of overlay a map onto the area that you're in. So, either with your phone, kind of like Pokemon Go, where, it overlaid the Pokemon onto the real world through your phone, it can overlay a map. So you can be a tourist in a completely new city that you've never been to and never get lost. Follow it all around. You can be at like a huge mall, at like Mall of the Americas, right? That's like the biggest mall in the country, and know where every single store is and exactly how to get there. You don't have to stop at that board and be like, okay, I'm here, and I got to go here and down 3 floors. No, you just hold up your phone and you follow the arrows.
Right.
Just really cool stuff out there, and these are the companies that I think. And this is the cool thing is that we're talking about this being a new technology, but these companies have been working on it for like a decade, some of them more, because this is not.
Yeah.
This isn't the beginning. This is sort of like the culmination of all of that hard work.
Yeah. Have you seen? I'm assuming you've seen the Apple Vision Pro stuff, and that's gonna. What do you? I mean, what do you think about all that? It seems like at the very least, it's gonna garner a lot of attention to this type of technology.
Definitely.
Are you going to buy one?
I mean, the price is a little bit prohibitive right now, but I'm sure that eventually, everybody is going to have one. They're going to be as ubiquitous as a smartphone,
Right.
Maybe not everybody has the Apple ones, but I definitely don't think that they're making a mistake, putting a lot of work behind this, because I think it's going to be big.
It seems like the first generation, and they have plans to make them smaller, lighter weight, wireless or whatever, because I guess you have like a battery pack now that you're sort of, so you'll have your early adopters in there.
Yep.
So virtual or augmented reality, augmented by AI, I guess. We have the infrastructure plays. What other are there any other types of? To me, it's almost like, the internet is incorporated everywhere now. AI seemingly is going to be, you're not even in, maybe even as short as a couple of years, you aren't even going to, no one says like, oh, it's a .com. This is a .com stock. It's just like, it's a tech stock, right?
Yep, it's a tech stock.
You don't focus on it having a website. Like, of course you have a website. So in 5 years, of course you're using AI.
Of course.
Like, which you could talk about which types of AI you're going to use, I guess generative or large language models or all this kind of stuff. But to me, it seems like it's going to pretty much impact everything.
Oh yeah, definitely. And what's interesting is that it's sort of unlike the internet and the .coms and stuff, is it's sort of already been infiltrating the economy and infiltrating society, sort of, on the down low. It's been quietly getting in there. So we do lots of things with machine learning. There's tons of machine learning things out there, and everybody's familiar with Facebook and Twitter and Instagram and TikTok, and that's how they decide what goes on your feed. It's machine learning. It studies patterns. It studies things that you look at. It goes through data, and it's like it recognizes these patterns, and it says, well, if they liked these things, then they'll probably like this thing. So that's going to go up on your feed, and so that's a type of AI. That's just sort of the previous generation. That's the AI that is analyzing things and analyzing data that already exists, and then sort of making predictions. Whereas what's really jump-started this is the Chat GPT, and the G stands for generative, where it's actually creating new things. And so we're starting to see it. You look at the writers and the actors strike out in Hollywood. One of the sticking points is that they're like, we want clauses that say you won't use AI to replace us, and the studios are like, nah.
Yeah, why? It seems weird. That would be, like trying to, mean, I guess maybe they tried to do that back in the day when the publishers went through. Remember, it was like the publishers were like, no, we're not putting our newspaper on the internet. And then people started doing it for free, and they're like, okay, now we got to do it. Now it's kind of reverted as they're like, no, you actually have to pay to subscribe to the New York Times and all this kind of stuff because everybody's using it. So it'll go in waves on there. How much are you looking at your current portfolio to look at like AI risk, right? So, I always bring up the Chegg or whatever, how their CEO was like, yeah, ChatGPT is like basically fucking
Eating
us
our
over,
lunch.
and then they tanked by 40%.
Yep.
He should have just kept his mouth shut, I guess.
Right, or mentioned that they had their own
Right.
GPT
So,
thing in the works.
Right. What are there particular industries that we're looking at that might just, if they don't keep up with AI, they're going to be like, people talk about the death of Google, right? The death of search, because right now you have to go to Google, you search, hey, how do I do XYZ? And then it gives you an answer. You go to the website and you figure it out. If you have something like ChatGPT or it's on your phone, where, like you said, you don't even have to type, you just talk to it and it gives the answer back.
And you don't have to like scroll through multiple pages.
Right.
You don't have to figure out how to ask Google the right way.
Right. So is that model going to now die, or somehow be supplanted by
evolve? I think would be the word. I
Right.
definitely see a company like Google is going to evolve. They're not going to let this. They're not going to become a blockbuster. But there are definitely companies out there that are gonna refuse to adopt it, going to refuse to evolve, and they're going to die off. I don't think that it's really, any particular industry itself is. I mean, everything is sort of at risk of being disrupted.
Yeah.
But it's going to be more of an individual company type thing. Are you going to take advantage of this? Are you going to use it and be opportunistic about it? Or are you going to let other people use it and get better than you? Like I just came across a company that the founder left a major accounting firm. And basically he was like, we spend months using people to go over data. Like, why? Oh, well, it's because we've always done that and we can get lots of billable hours if we do that. And so he, got a group together and they developed software that can basically do it better and faster. So instead of taking a month and having a whole team, you can gather your data for like a week, run it through this program, and it'll find even more places where you can save money than that team did over a month.
Right.
And it's basically free because you don't have to pay the program. You just have to license the software. So things like that, and there are going to be companies that refuse to evolve. And, if like the big accounting firms don't want to adopt something like this, well, then these small and medium accounting firms can really start taking their clients from them. And a company that used to do, mom and pop's diner are now going to be able to do, all of the Ace Hardwares in their state. We'll go with Ace because it's a franchise company.
Right.
Or all of the Domino's pizzas in their state, And then like the ones who used to be able to do all of the Aces or all of the Domino's in their state, well, they'll be able to actually go after, multi-state businesses or even multinational businesses and be like, look, yeah, we don't have the staff that they have, but we don't need it because we've got the computers that they don't.
Right.
We've got the programs that they don't. I think it's going to be like that. There are a lot of people that are like, oh my gosh, even in our industry, like in newsletters, they're like, oh man, it's going to kill us. And I'm like, are you kidding? It's making my job so much easier. Like,
right.
It helps me with rough drafts. It helps me come up with catchy, subject lines. Sometimes it's hard to come up with like the headings for your paragraphs. And it's like, hey, like this is what my paragraph's about. Help me come up with like some good ideas for it. It's like it's almost like having an assistant.
Yeah, absolutely. The big, I feel like the big irony here is, for the longest time, people thought that sort of low-wage, low-skilled jobs would be replaced by technology first, whereas now it is the quote-unquote white-collar, quote-unquote, knowledge workers that are actually being supplanted by AI, and the people that are likely have the most job security right now are the people that work with their hands, are doing a trade, a highly, a physical skill that...
It's good that you say for now, though, because there's definitely companies out there that are working on automating things.
Yeah, I just think the robot aspect of, having a robot plumber or a robot carpenter build something for you. It seems like that technology is a little bit further out than a lot of the stuff we've been seeing is all ones and zeros.
To have it on a job site, but there's a company here in Baltimore. It's a private company. It's very small. They don't have, huge revenue or anything. But they have a robot that builds frames. So it'll build like the frame for the wall, right? So they build all of the frames for the house inside their factory, like inside their little warehouse here in Baltimore, and they put them on a truck and they send them out to the job site, and then people just sort of have to nail the walls together. So you don't have to have somebody out there measuring, cutting, doing all of that stuff. The machine does it back in the factory. And I think that's going to be, something that moves forward. Because when you actually look at it, I know we're like diverging topics here, but carpentry, right, is one of the most expensive parts of the construction industry. And it's because they're expensive to insure, right?
Right.
People who do demolition, when they have an accident, the house falls down on them. You have to make one payout. People who do like welding up on like high rises, if they have an accident, they fall like 30 floors to the ground. Like you have to make one payout for them. But people who do, carpentry, they cut their hand off. They can never work again for the rest of their lives, and you got to pay them forever. And then their family too. And so that's really expensive, like to get those insurance policies and things. So if you can automate that process, man, wow.
There seems to be a shortage of that. I've talked to people that have do carpenter contractor work. Mm-hmm. One, they're all older.
Yep.
And the number one thing they tell me is that it's hard, like the younger generation doesn't want to get into that trade. No. And so it's become this like cycle where they can't get younger people to teach their skill to it, likely because most of the younger people, especially in this country, have been brought up to say like, oh, like you don't want to work with your hands. That's sort of like a blue collar thing. You need to go to college and you need to learn a skill so you can do X, Y, Z. And over many generations, they have been sold that and gone into massive amount of debt, college debt to do that. And now they're having trouble finding a job. Whereas, hey, if you wanted to be a carpenter, I bet you can find a job like that right now.
Fast. There'll be somebody to take you on as an apprentice. They'll teach you everything that they know, and then they'll hire you to run a crew for them, once they've taught you. It's definitely tough, and you're absolutely right. We actually, I run an investment newsletter called Main Street Ventures that we invest in private companies that are making their investments available to retail investors. And so one of the companies we invested in is basically they closed their funding round, so I'll go ahead and name it. It's called Snowball Industries. And basically what they're doing is they are rolling up these businesses like that. These are cash flowing businesses, plumbing, welding, carpentry, stuff like that. And like you said, most of the people doing it are older and they're getting ready to retire. And their kids don't want to take over the business and they can't find somebody else to teach and take over the business. And they don't want to just close it.
Right.
They really like to see it live on after them. So they're literally selling to this company, and this company is going in and they're running the businesses. They're managing the businesses from a central office, and then, going out and hiring staff and keeping, the family name sort of going and, keeping that, source of employment in the community and everything. But they're literally like, this opportunity exists because the people who own these businesses, their kids don't want them.
Right.
And they saw, like and their mom or dad or whomever supported, a family of four with this business, put them through college, did all of these things. Right. And they're like, nah, I'm too good for it.
Yeah, that's it. You see it with restaurants. The Little Italy in Baltimore was much larger and thriving, 20, 30 years ago. And slowly the restaurants have closed down and, moved on because, they can't get the younger generation to want to take part in it. You see it a lot
on the farm, too.
Yeah.
A lot of farm kids decide that they don't want to do that, which, it's understandable. It's hard work, It definitely is not, it's not easy. You don't get to sit around all day and farming especially because, you're taking care of dirt in the hopes that it gives you corn or soybeans or something
Right.
later on, so that's definitely that's a tough one.
But it creates an opportunity because there's a huge demand for those skills right
Yeah,
now, and
everybody
we
needs
don't.
food. I
And
mean, we got a housing shortage.
right,
Somebody's got to build the houses,
yeah,
Cars, I mean, there's tons of cars out there. They're super expensive. They're way more, complex. My first car, I could like climb inside the engine compartment and work on it myself. Like now, you need a computer degree just to open the hood. It's crazy. And I drive a Jeep. Like that's the most simple vehicle out there, and it's still too complicated for me.
right. So you just recently bought a house,
I
right?
did.
So I mean, how has that process been going with the high interest rates and just the housing sort of shortage?
So I will tell you, bought the house from a builder,
Right.
which as
It's a different process then.
yeah, and anybody who's bought a house from a builder or worked with a builder knows that you always have complaints about the builder. But like, despite my complaints about the builder, he was able to sort of sweeten the deal for us in ways that a homeowner wouldn't have been able to. He was able to throw in upgrades.
Right.
He was able to. Some of the bigger builders offer loans too, so they can buy down the interest rate.
Right.
Do landscaping. But basically, we got our driveway paved. We got a garage door that opens on its own. We got a fireplace thrown in, and this was also that we would pay his asking price.
Right.
So that worked out really well for us. The interest rates were rough. I mean, we locked in a pretty high interest rate, but now it's low compared to where they are now. I think now they're above 7.5% for a 30-year mortgage. I mean, which is still, I always like to bring this comparison up. My parents, I think, had an 11% mortgage, at one point. So 7.5% still low, 6.5% still low. Historically speaking, this is what normal interest rates look like.
Yeah, it seems like there's going to be some sort of reckoning that comes in the market, but there's still huge demand because I guess they just aren't building enough houses or
and people, everybody refinanced at like 2.5% rates.
Yeah,
so,
I was one of them. I don't plan on moving. I have a 2.75% mortgage.
Yeah,
why would I move?
That and get like a 7.5% one,
And unemployment is still low. So I think that, unless unemployment rises dramatically and people lose their jobs and then they have to foreclose, they aren't going to be forced out of those homes.
True.
So meanwhile, sort of the younger generation is sort of left with trying to,
figure it out, pick up the scraps and stuff. And you also have this huge generation, the baby boomers who are, nearing, if not in retirement. They've got tons of money, they can afford to come in and offer cash for a house,
right.
So they can come in and buy up houses and then, become landlords or just buy them as investment properties,
what's your take on this whole, corporate landlord stuff? And I think I saw some stats that are like saying that 40% of the houses are going to be owned by sort of corporations by like 2030 or maybe even
definitely. I mean, it's possible. Before World War II, America was a nation of renters. Most people didn't own houses. It was the GI Bill that really like helped with that, and the post-war recovery. Helped where we had this American dream of like, a house, 2 bedrooms, 1 bath, a car in the driveway, turkey in the oven. But before that, I mean, my mom grew up in an apartment. Most people grew up in an apartment. The people who owned their homes were like farmers and stuff. Like they owned their home because like you own the land that you farm on. But most people rented, and I could totally see that happening. And I have mixed opinions about it. Mixed opinions because I don't like to see corporations owning everything. That kind of makes me worry. But at the same time, a lot of these corporations are investable. They operate in a structure that's known as a real estate investment trust. As a real estate investment trust, the majority of their assets are invested in real estate or mortgages or something related to real estate. And by law, they have to pay out 90% of their pre-tax profits to investors. So I love those at the Wealth Advisory. We invest in a lot of those. Right. And, you have to have corporate real estate in order to have REITs.
Yeah. Are those how much are those mostly apartment buildings that a lot of them are investing in? Are they single family houses? Are they just a mix?
So it's a little bit of both.
Right.
We've got one in the Wealth Advisory portfolio that literally its focus is mobile home parks.
Really?
Yeah, I love a good trailer park, man. Let me tell you. So they get a bad reputation because some trailer parks are kind of sketchy, but you've got really good ones, and basically, I mean, they're a way that you can get a 20% return on your investment. And you can actually do good for some people because you're providing affordable housing.
Right.
They're impossible to get zoned now. I mean, impossible to build a new one. So we like this company because they sort of go out and they buy up the existing ones,
Right.
and bring them under their brand. They're able to sort of operate at scale, so they can improve on these places, repave the roads, offer trash removal and snow removal and stuff like that. There's a company that we're investing. It's a private company that's sort of doing something similar, but on a smaller scale, in Main Street Ventures. And they've literally, they've been doing this for about, I want to say 2 years now, and they're already getting letters from the tenants at their parks thanking them for all of the improvements that they're making. And we were worried when a corporation came in and bought the park that you
Right.
guys are doing so many good
Yeah.
things. This is great. We love it here. We never want to leave. So I love the trailer parks, and there are REITs that invest in those. There's others that invest in office properties. Those ones have just been pummeled, and honestly,
Yeah, the
I think they're
commercial
making
real estate.
great contrarian investment right now.
Well,
Great
the return
one.
to office seems to be a big push. I think last week, Facebook said like, hey, they're basically demanding people return to
JP
office.
Morgan is. The government's going to start having people come
Right.
back. So and when you start seeing headlines about like the death of the office and office space like ain't what it used to be and stuff like that, like that's usually a really good contrarian indicator that we're at a bottom.
Right.
And we're probably going to come back up. We just added an office real estate investment trust in the wealth advisory, and I mean, it's great. It's currently, I think it pays like a 25% dividend right now because the stock has just gotten hammered so hard, but it's still got most of its tenants. People are coming back. Like, it's well diversified.
Yeah, I mean, you have to think, part of the reason some of this real estate mess has happened is, like you talked about, hey, you can't get trailer parks zoned, or basically no one wants to approve any new housing because people
like, oh, we don't have enough affordable housing. And it's like, well, let me build some. And they're like, no, you can't do that.
Yeah,
No.
exactly. And then they wonder why the prices go up with the low inventory and all that,
man.
all that kind of stuff.
There's a great story. It was like earlier this year, late last year, Anderson Horowitz, the guy that he was an early Facebook investor, like made tons of money being like a venture capital tech investor.
Mark Andreessen.
Andreessen, that's it. Yeah, and he's at Anderson. Yeah, Anderson Horowitz. Yeah, he's one of the founders of it. But anyway, he was like lamenting, how there's not enough affordable housing and we need to do something about this and blah blah blah. And literally within a week was also protesting an affordable housing community that was going to be built within like a couple of miles of his mansion.
Oh yeah, help these people out, but no, not next to my house.
No, I don't want them there. Come on.
Yeah. So the city, it's interesting. The cities are going to have to do something. I think there's a lot of, even in Baltimore, there's a lot of planned projects to convert some of the office buildings into apartments.
Mm-hmm. Which is just kind of crazy when you think about it in Baltimore. They're like, oh, hey, let's spend hundreds of millions of dollars to convert these things that were offices into apartments, as opposed to just fixing the 70,000 vacant houses that were made to be houses.
Well, and and you see this out where I'm at too, is one of the things that is crazy about, people talk about, oh, the average price of a home is going up. People don't realize that if you compare it to the houses, and like you said, that our parents grew up in the 1950s, they're like 3 times the size.
Yeah, totally.
Right? They got all these modern amenities, and that I think the average new house now I think is like something like 2,500 square feet, whereas back then you're comparing to a new house and it's like 1,100 square feet.
Exactly.
So you're not really comparing apples to oranges.
No, not at all.
And so that's the issue too, is people don't want to build affordable housing because they want to be able to charge $1 million for a single family house.
Oh, definitely.
And
the builders are going to build whatever gets them the biggest profit margin, and that's going to be a luxury house. But the idea is that like people like you and me, like we start to make more money. We're getting a little older. We can afford to buy one of these luxury houses, and then we sell our house to somebody else, and that becomes their starter house. But like some of us don't want to sell them. Like I'm one of those. We didn't sell our house here in Baltimore.
No, you're keeping it and renting it,
yeah,
right?
We transferred it to a property management company. We're going to rent that out. But then you've also got people who are just like, well, I don't want to move to the new place. I'm gonna hold on to this one for as long as I can. And also, I mean, starter houses aren't starter houses anymore. My townhouse, that was the first house that I owned. But I think right now they're like, Zillow or Redfin, the online real estate companies are estimating it's worth $500,000. And I'm like, how can any first-time home buyer afford to buy that?
Right.
Like that's not a starter house anymore.
Right.
You got to go for one that's like falling apart at this point.
Yep.
Yeah. It's crazy. But in answer to your question about how the new house has been, I will definitely say that labor prices blew my mind. Like I'll get quotes for a fence or a deck or a patio or something like that. And, you're talking about, okay, so let's say a deck. I got a $30,000 quote for a deck, which seemed ridiculously high to me. And then I broke it down and looked at it. It's like 20,000 of that is labor. You know, and then the rest of it, I think it was even more than 20,000, more like 25,000. So it's like $5,000 worth of wood, and then $25,000 to convince these dudes to show up and turn it into a deck.
Yep.
It's crazy.
Yeah, and that's cheap compared to what it was, I think, last year or the year before when lumber prices were up.
That was crazy.
Yeah.
I redid the deck on our house in Baltimore around that time, and it was actually only about, I want to say, overall $100 more for me to put down that TRX composite decking, the Trex decking.
Yep.
Yeah. So I put down composite wood decking because it was like $100 more, and you don't have to mess with it for like 50 years. Like, that's a good deal, but I'll pay $100 for 50 years worth of not having to stain that deck. But now it would be like $1,000 more because prices have moderated there. But yeah, it's been crazy, seeing how much the labor costs, and then, how difficult it is for these guys to get people to keep coming back,
Yeah, the time frame when you can get stuff done has increased. Like, hey, we're 6 months out for this, and it seems to be, percolating through the entire system. So, I guess we'll see what happens in the rest part of this year. So
yeah, we will. Just a note to anybody out there listening who thinks they're too good for manual labor: UPS drivers are going to be making $170,000 a year. $170,000 plus benefits.
Yeah,
that's good money for carrying boxes, man.
Absolutely.
Good money.
And I think they're still looking to hire drivers too.
They are. What can Brown do for you? A lot, apparently. I might have to pick up a route on my spare time.
Yeah, no doubt. All right. Well, I think that's a good way to wrap it up. Yeah. We're going to go apply to UPS to become a driver.
Yeah, and you might see me delivering your package later. Be nice.
All right. Remember to subscribe, like, do all that stuff, and we'll catch you next time.